The theme of today's video is the outlook for capital markets in the month of March 2023. Yes, we all know that the Indian stock markets had a particularly interesting month in February 2023 due to Hindenburg's report, and stock market participants were kept on their toes throughout the month. However, in the week ended on Friday 3rd March 2023, the domestic equity benchmark ended the week with some gains as value buying emerged at lower levels. The domestic equity market declined in 2 out of 5 trading sessions during the week ended on 3rd March 2023. The Nifty settled at above 17,450 mark and the S&P BSE Sensex has gained 345.04 points or 0.58% to settle at 59,808.97. The Nifty index has added about 128.55 points to settle at 17,465.80. Also, the BSE Mid-Cap Index gained 1.73% and the BSE Small Cap Index gained 0.95%. Given the uncertainty surrounding the global growth, many stock market participants believe it is best to concentrate on domestic stocks at this point of time. What investors should watch out for and what the stock market looks like going forward is what we are going to dwell upon in the due course of our discussion. This March, we feel the investors should pay attention to some of the happenings across the world and also in India. Some of the important aspects being, on the international front, calendar year 22 has been marked by high inflation in the United States. Market consensus estimates, in fact, predict that inflation in current year 23 will be 3.9% instead of 8% as it was in calendar year 22. Inflation, however, may prove stickier than expected due to persistent supply side issues and China's reopening. Metal prices have hardened over the last 3 months led by China reopening. Consequently, inflation expectations are lower versus previous cycles and will need to be monitored going ahead. US non-farm payrolls and unemployment rate for February will be disclosed on Friday 10th March 2023. However, the US economy unexpectedly created 5,17,000 jobs in January 2023, the most since July and way above an average monthly gain of 4,01,000 in 2022, easily beating market forecasts of 1,85,000. The unemployment rate in the US inched lower to 3.4% in January 2023, the lowest level since May 1969 and below market expectations of 3.6% as the number of unemployed people declined by 28,000 to 5.69 million and number of employed increased by 894,000 to 160.1 million. Further, it's a matter of discussion across the stock markets in the world that investing in the information technology sector, which has a decent weight on the benchmark indices of various world indices, requires investors to be aware of the fact and extent to which the probable recession in the US and the Eurozone affects export-driven companies. Caution list at this point of time. Internationally, another important thing is China, though, will unveil inflation data for February on 9th March 2023, but the country's annual inflation rate rose to 2.1% from 1.8% in December. This was the highest reading in 3 months as far as the inflation in China is concerned. Further, Bank of Japan will decide on interest rate on Friday 10th March 2023. Bank of Japan hitherto maintained its key short-term rates at minus 0.1% and that for 10-year bond yields around 0% during its January 2023 meeting. having seen the internationally important aspects and internationally important event chart scheduled for the period ahead, now let's focus on the India-centric aspects. The Indian economy is expected to grow by mid-teens in the next 2 years. Higher commodity prices, including high energy prices, could lead to earnings downgrades if there is too much disappointment over slower economic growth. The volume growth rate of most other consumption categories has been tepid over the past few quarters, with the exception of the premium segment. A revival of demand is crucial at this point of time for growth in general. So, three important domestic themes are going to dominate the markets in the month of March and the year ahead. They are, first and foremost, consumer demand, of course, is on the rise. Despite recent poor performance, profitability has improved, providing some valuation comfort. As a result of a combination of factors, capital spending, both private and public, is enjoying a strong traction. The industrial sector should grow in the next few years, and secondly, as a result of a combination of factors, capital spending both in private and public is enjoying strong traction. The industrial sector should grow in the next few years. And third, credit or financials benefit from an increase in consumption and capital spending. Double digit credit growth coupled with historically low borrowing costs imply good investment opportunities going ahead as far as India goes. The optimal equity investing strategy would be to focus on domestic market issues, as India is expected to continue to grow faster than most other major economies in terms of percentage growth rates. However, the March 2023 stock market outlook for the past 2 years, if we take it as a precedent and try to read how is it going to be even during the current year, then Indian markets have far outperformed emerging markets, particularly in the month of every March in the past 2 years. This can be explained by the resilience of the domestic economy when all emerging markets faced the same global challenges. A decent correction was observed from December 2022, with foreign portfolio investments coming under pressure. Global GDP growth rates have also been continuously downgraded in the recent months. The Indian markets are currently trading at one of the highest premiums to emerging markets in their history. Although there has been a reversal in the early days of the year, with most global indices in the green, while our market has been under sustained pressure. It is expected that other emerging markets to catch up and believe the resilience of domestic economy means it could eventually attract returns to Indian markets. Then money will hunt where the returns are to be made. I believe that other markets could continue to outperform our market, as they have been quite oversold over the past 1 year. So, we have seen some of the international aspects and we have seen some of the Indian aspects, and we also saw the precedent of March month. And now let's get to the main point of what's in store for March 2023. The stock markets may remain choppy amid the fears that the Federal Reserve will keep rising interest rates to combat the sticky inflation with which the USA has been facing for a while. Foreign fund outflows and rising bond yields will restrict equity rally in the near term. Investment by foreign portfolio investors and domestic institutional investors will be, of course, monitored, but we need to weigh the kind of flows from FPIs and the kind of investments that are coming from the DIIs. In the derivatives market, the Nifty 50 index option chain for 29th March 2023 expiry wise showed a maximum call open interest of 69,545 contracts at a strike price of 18,000. Maximum put OI of 94,390 contracts, which were seen at a strike price of 17,000. This data suggests that Nifty 50 index is likely to hover anywhere between 17,000 and 18,000 band in the near term. Given the volatility in global markets as well as domestic growth challenges and expiry of derivatives nearing, investors, I feel, should ideally doing their asset allocations according to their risk tolerance. Hope the information is useful. Thank you very much.